Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets were mixed at the start of trade. Investors now await the policy decision of the Federal Reserve in the US, where it is widely expected to cut rates. Oil prices fell after Saudi Aramco said it has resumed partial production at its damaged facility in Abu and will restore normalcy by the end of the month. PE firm Blackstone and Salapuria Satwa Group have decided to acquire Coffee Day's global village tech park in Bengaluru for an enterprise value of 2,700 crore rupees. And Bajaj Finance will be in focus today after the board approved raising close to 8,500 crore rupees through a qualified institutional placement. And finally, India's principal economic advisor Sanjeev Sanyal says that a GST rate cut to boost India's slowing economy is not a good idea. Let's talk about the US markets now. They ended higher on Tuesday. The Dow and the S&P 500 saw modest gains, while technology shares led the outperformance on the Nasdaq. Investors now await the policy decision from the Federal Reserve. Renita Young of Bloomberg News tells you what happened in that session.
U.S. markets ended higher on Tuesday as investors weighed the outlook of oil and braced for a Fed rate decision that'll come in on Wednesday. After the two-day policy meeting, Fed leaders are expected to cut rates by 25 basis points in response to slowing global economic growth and muted inflation. Now, during the session, we saw a little bit of Fed activity locally in New York when the New York Fed conducted its first overnight system repurchase agreement in a decade after a rare mid-month surge in U.S. money market interest rates. Also during the session, we saw oil drop more than 5% after a report from Reuters saying that Saudi Arabia's oil output will actually be fully back online in the next 2 to 3 weeks. Gold also extended an increase after this latest oil news as investors worried a little bit more about the oil situation in Saudi Arabia, but also braced for the Fed rate decision that'll come at 2 p.m. Eastern Standard Time on Wednesday. Meanwhile, we did see a few movers in there just after the bell. FedEx reported disappointing earnings, and WeWork expects an IPO to be completed by the end of the year, and other earnings to come include Chewy, Adobe, and General Mills. And that's a look at your Tuesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also take a look at what the Asian markets are doing at the start of trade. We're joined live by Rosalind Shin from the Bloomberg studios in Hong Kong. Good morning, Rosalind. How's it looking at the start of today?
Hi, well, it's a bit of a mixed picture this morning. The MSCI Asia Pacific Index is dipping into negative territory, but if we strip out Japan, we actually see that the MSCI Asia Pacific ex-Japan is actually making gains of about 0.1%. So Japan are really weighing down the MSCI index. The Nikkei is flat, but the Topix is losing about just over 1/3%. We did have some export numbers out of Japan this morning, falling for the 9th straight month in August, down the most since January. The number came in at a decline of 8.2% versus expectations of 10%, so not as bad as expected. However, it's still a reflection of the slowing global demand, the trade issues that Japan is facing, especially with China, has hurt this economy. And there's obviously the lingering uncertainty over whether Trump will impose auto tariffs, and the sales tax hike, which is coming along on October 1st, added into that mix as well. Imports decreased 12% in August against estimates of a fall of 10.7%. Korea removed Japan from its list of trusted leading partners as well, adding to those trade issues there. We see the yen steadying at, was actually weakened a little bit, but it was near a 7-week low earlier against the dollar ahead of the central bank's decision. Of course, we've got the BOJ starting its 2-day meeting today. That, of course, is expected. There's some speculation that the framework may be tweaked to adjust the falling bond yields and also weakening economic outlook for Japan. A Bloomberg survey found 37 out of 48 economists expect no change when the BOJ announces its policy on Thursday. Of course, we've got the Fed, which wraps up its meeting later on Wednesday. 25 basis point cut, of course, largely anticipated there, and that If that happens, a rate cut there could also increase pressure on the Chinese central bank, the PBOC, to do more of its targeted monetary easing as soon as Thursday, which means essentially usually trimming its reverse repo rate. So quite a lot of movement there possible in terms of the central banks around the region. Oil, of course, sinking from a 3.5-month high as Saudi Arabia restored almost half the output at its Bukake plant. Brent back now below Brent now back below $65 a barrel there. In China and in Shanghai, we've got the Hang Seng trading higher today. Shanghai Composite also gaining about 0.25%. Australia, that is dipping in and out of negative territory. Right now it's just slightly in the red, down by 0.06%. But one of the stocks there that we've been looking at is Qantas among the top performers, and that is climbing the most since May 2018 after Morgan Stanley raised the airline to overweight on the strength of its loyalty unit. So quite a lot to take in today. Some areas are basically investors are watching and waiting to see what the central banks do, but there's still a fair bit going on. Back to you.
Thanks so much for that, Rosalind. Now, I do want to talk a little bit more about what Rosalind said with regard to Saudi Arabia and the oil production there. Oil prices fell after Saudi Arabia came out with an official statement nearly 4 days after a drone attack on Aramco's facilities in Abu Qaik. Energy Minister Abdulaziz bin Salman said that the damaged facility is back to producing 50% of its earlier output, and the rest will be put into place by the end of the month. First, let's listen to what he had to say.
Brothers and sisters, with the grace of God Almighty and the abilities of Saudi Aramco and its excellence and credibility and work ethic and the efforts of its workers and the productive work environment that was made possible by the government, in the last 2 days there was a containment of the damages and the recovery of more than 50% of production that was disrupted as a result of this terrorist attack.
Now, James Thornhill of Bloomberg News gets us an update as to how the oil markets have reacted to the news.
We saw quite a sharp pullback in the price on the back of that news. As you mentioned, 2 million barrels worth of production has apparently been restored out of the 5.9 million that was taken out by those strikes that caused such ructions in the market on Monday. We're still in a very volatile price environment. The market went up by the most on record on Monday. It's pulled back about 6.5%. And traders are telling us it was probably the busiest day they've ever seen in the market on Monday. So I think it's going to take some time for that churn and that turbulence to sort of smooth out, even with this production coming back on stream. And we await more concrete details on how long it's going to take for this production to come back. Saudis are currently sort of indicating that it might be as soon as end of September before they're back up to full capacity. And if that's the case, then I think we could see some more of those gains that we saw on Monday sort of unwound.
Even more than back to capacity, right? 11 million barrels a day by the end of September seems to be even higher than what we're seeing for the month of August. So are there any risks that we should be watching out for now?
Well, Sherry, that's right. I think what you'll see is that the production itself will become less of a factor as it becomes clear that the Saudis can get back up to full speed in a fairly short order. And of course, what the focus will then be on is what the political response is going to be to these attacks. The Houthi rebels in Yemen have already claimed responsibility, and they've said that they won't stop here. They're prepared to continue targeting Saudi oil installations to make their point. And obviously, the Saudis and the US are both pointing the finger at Iran, in terms of directing the actions of the Houthi rebels. And the US said overnight that they're preparing a report on who they thought carried out the attacks, and that's going to be delivered in the next 48 hours. So that's going to be another news point that the market will certainly be watching for closely. It's not entirely clear to me why the US would want to escalate this into a military conflict. Of course, it was an attack on Saudi Arabia. It wasn't an attack on the US, and the Saudis have, got plenty of military hardware themselves that they can deploy if they feel the need to retaliate or to step up the defences of their installations. But obviously there's a huge uncertainty over what the reaction will actually be, and until that becomes clear in the next few days, I think there will be uncertainty hanging over the market, and it probably will sort of limit any pullbacks in the crude price. Beyond that, of course, we've got the Fed decision, which might start to become another focus for the market as the situation plays out in Saudi Arabia. So we might find the market starts to remember that there are other factors at play and react accordingly.
In fact, let's talk about that Fed decision. It's coming up later today. It'll announce its policy decision, as you know, tonight when the U.S. markets are trading. And this has been, if you remember, a week that has been marred by a spike and a subsequent cool-off in oil prices. We just spoke about that. And also a sudden rise in money market interest rates that impact funding costs overall. So will the Fed cut the rates for the second straight time? Is a 25 basis points cut priced in? Kathleen Hayes of Bloomberg News has the answers.
Oil and the economy, because the Federal Reserve has made it very clear the past few months. They see the domestic economy mixed, looking solid, looking fine. It's the global risks that are rising so much. In fact, Jay Powell, when he spoke in Zurich a week and a half ago, the last time a Fed official spoke about the economy in public, the same mantra was repeated. He sees moderate U.S. growth, a strong labor market, counting on a solid consumer to keep the economy going. In fact, 2% GDP in the second quarter. You had nearly 5% year-over-year growth in consumer spending. Investment, though, down 6%. The trade war scene taking a toll on manufacturing. Uncertainty causing businesses to pull back and not invest. Let's look at something that shows another aspect of this dichotomy. The white line is the Institute for Supply Management's Purchasing Manager Survey. Services, look how they've stayed in a healthy range, back up to 56.4. Manufacturing, the weakest since 2016, back below 50, signaling contraction. This is the problem. So, therefore, the Fed is seen making that 25 basis point cut because the global economy is slowing. The trade war is still going. The oil price spike, well, first of all, it's starting to fade. It would have to be a 100% spike to really correlate well with a recession, but it underscores, Paul, the geopolitical risk, Brexit, Hong Kong, and more. This is why the Fed will do an insurance cut.
Yeah, Kathleen, the Fed does seem divided, though, on what to do. There's dissenters still seeing no need to cut, and then we've got others saying, well, we've got to lower by 50 basis points. So how does that circle get squared?
The dissenters are expected to dissent again. Eric Rosengren from the Boston Fed, Esther George from the Kansas City Fed. They said we don't need an insurance cut. Save your ammunition. The economy is fine for now. Jim Bullard, on the other hand, has once again been arguing for a 50 basis point cut. He's worried about weak inflation expectations, inflation not hitting toward target. He's worried about the yield curve, the 3-month bill to 10-year yield, which is still inverted. Let's go to the dots, because this is going to send a signal everybody's watching. At the far left-hand side, what you see is 8 dots, 1 rate cut or 2 rate cuts by the end of 2019. 8 dots, no more rate cuts. People will wait to see how this changes, also how it changes perhaps for 2020, 2021, and 2022. That's where people are going to get a sense of how aggressive the Fed is and what they can expect next.
Let's also have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
The top advisor to Hong Kong leader Carrie Lam, who says the government sees no benefit in conceding to protesters. Bernard Chan told Bloomberg that authorities think increasingly violent demonstrations will likely continue even if the government meets all the protest demands. He added that while moderate protesters may be swayed by attempts to address social inequality, more radical peers are unlikely to give up. Switching to oil now, oil plunged on reports that Saudi Aramco is close to restoring about 70% of the production lost in the attack on a key refining plant. Brent crude fell almost 7%, although prices steadied on claims that the U.S. has identified locations in Iran where the attack was launched. Separately, Iran's Supreme Leader Ayatollah Ali Khamenei has ruled out talks with the U.S., quote, at any level.
Brothers and sisters, with the grace of God Almighty and the abilities of Saudi Aramco and its excellence and credibility and work ethic and the efforts of its workers and the productive work environment that was made possible by the government, in the last 2 days, there was a containment of the damages and the recovery of more than 50% of production that was disrupted as a result of this terrorist attack.
And finally, trade talks get back on track from Wednesday, with working-level officials heading from Beijing to Washington to prepare the ground for next week's negotiations. The U.S. side has discussed a limited agreement that would delay or roll back some tariffs. And White House economic aide Larry Kudlow says, quote, there's a certain amount of optimism on the wind. The two sides last met in Shanghai in July. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, now let's turn to the Indian markets. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, after yesterday's move, we've essentially wiped out gains for 2019 on the benchmarks.
Yeah.
But how are we looking at the start of today?
Well, we haven't still reached the year's lows yet, and that is a big question now, Alex, that are we likely to breach that?
That's close to the 10,000 mark, if I'm not mistaken.
No, it's not 10,000.
1 year.
It's about, I mean, I'm talking about now 2019,
okay.
and it's about 10,700 odd, but I'm going to have to come back with the exact number. But that said, well, again, we're keeping an eye on that very, very specific number, whether or not we actually do eventually see the Nifty move below that and mark out a new low for 2019. That said, well, for now, it's 10,000. We're looking at some advance for the SGX Nifty, and there could be some respite, but you never know. Things could change in the next 1.5 hours. We did see that sharp cut on the Nifty, and it was evident across the board, including the other indices too, including the banking indices. But how are ADRs doing now? So we don't have too much except for something like a Tata Motors, which did decline by around 3%. We'll be watching out for some of these names as we move into trade today. But let's also talk about your fund flows, because that was the all-important number that everyone was keeping an eye on. And when it comes to fund flows, the net sell figure wasn't as big as one might have expected, because usually we have, on a day like this, we have a number which is well over 1,000 crores. But well, yesterday we had a selling worth 808 crores on a net basis, and DI's cost buying into it, but just a bit. So DI's really didn't buy too much on a net basis either. That said, let's move on and talk about contributors. So you have HDFC Twins, ICICI Bank and Axis Bank. Sure, they did provide some amount of losses, but the losses this time on the Nifty are relatively broad-based, because the others provided 123% points decline on the Nifty 50. As far as your futures and options space is concerned, there are fresh shorts into the system right now, so there is more weakness coming in. The Nifty Bank futures too, there is a fresh short build up with a 1% increase in open interest. Moving on, as far as your open interest distribution is concerned, 10,800 mark with the put. Very solid there, a lot more writing there, and on the higher end, we are looking at 11,000 mark, which is looking at some amount of traction, as you can see here. But the positive here is, and at least some may take this as a positive, that there's writing around the 10,800 mark, which means at least some traders out there are betting against the Nifty going below that on an immediate basis. Well, let's wait and watch. Naturally, the VIX rose by as much as 7% at around 16, and as far as your put call ratio is concerned, it's gone below the mark of 1 again. It's still at a relatively neutral level of around 0.98, and in terms of stocks, well, we did have a lot of weakness across the board, but the likes of Pidilite, Apollo Tyres and Axis Bank do stand out here with a lot of weakness, with a lot of fresh built up towards shorts. Motherson Sumi, Oracle Financial Services and ACC are among others which are looking at a little bit of recovery. So let's keep an eye on some of these names, Alex, and of course we'll be watching out for whether or not there is some amount of short covering after the kind of selling that we saw yesterday.
Thanks so much for that, Agam. All right, let's turn to a Bloomberg exclusive now. Howard Marks of Oaktree Capital says that he is now looking for opportunities in China. In an interview to Bloomberg Television, Marks said that opportunities to make money in distressed debt are never constant. Listen in.
Opportunities come and go. The opportunities to make money by buying distressed debt are not constant. In fact, they're the least constant thing I know about. We have a 31-year record. The result is pretty good on average. We've made the vast majority of our money in the funds of 5 years, and at the other times the opportunities recede. Everything is risky if you can't figure out what you're doing and you pay too much. The other thing is, when there's too much demand, you can't get great bargains, and if you succumb and participate and pay too much, yes, then it's risky.
All right, so let's talk about where we are. Do you expect to see another 2008 type opportunity, which it was one of the years that I imagine you're talking about, in the next couple of years?
I don't think we're in a bubble. I don't think we're going into a bubble comparable to 08. So there's no reason to believe that we'll have the panic that we had in the fourth quarter of 08 following the bankruptcy of Lehman Brothers, another global financial crisis. But, you know, there's been a great deal of debt issued. There's been a battle to be the person who buys that debt. The battle has taken the form of bidding down the quality and the safety. So there's a lot of risky, aggressive debt that's been issued in the last 5+ years. And when that collides with a weak economy, I think there'll be great opportunities.
But not necessarily
right. There's the quantitative aspect of the amount of weak debt, and then there's the qualitative aspect of the amount of panic. And there's no reason why we should have that degree of panic again. You know, people were talking about the end of the financial world 11 years ago. I don't see a reason to talk about that today.
So right now, there's a record amount of dry powder or just cash, I guess, or that's been committed to some of these mandates. And I'm wondering where you're seeing opportunities, even though everything has been bid up at this point.
Opportunities are very few today. I mean, I wouldn't even use the term seeing opportunities. Investing in distressed debt is a struggle today. You know, the economy is too good. The capital markets are too generous. It's hard for a company to get into trouble. If they get into trouble, the capital markets are happy to bail them out. You know, it's a struggle today, and it would be misleading to your viewers to talk about where there are opportunities. They're practically non-existent.
Well, does that mean that you're not investing?
Largely, yes. It's very, very hard to put money to work in distressed debt.
Would you rather than put your money in cash, or where do you put it instead?
Well, what we do is we don't call it. We form funds, people commit amounts of money to the funds, and we call it as we spend it. So right now, we're not calling very much.
What about China? You've talked about how there are opportunities there. Is that still the case?
Yes, I would say China is one of the exceptions. I mean, China grew on excess capital investment facilitated by aggressive lending from the banks and also non-banks. And I think they have big piles of NPLs, of non-performing loans that will not pay. And I think they want to recirculate that capital by getting those NPLs off the books. And we're very interested in being part of that process.
All right, let's have a look at the stocks that you're likely to see in action today. Soumya Sarkar is joining me now to tell you about the stocks and news. Morning, Soumya. What's on your list today?
Well, firstly, I'll start off with the two nifty companies that will be in focus today. Reliance Industries, firstly, because the promoter group has increased stake in the company by nearly 2.7%. Now, this acquisition was pursuant to a scheme of arrangement among the promoter group companies and not involving Reliance Industries. Secondly, Bajaj Finance, because there the board has approved raising nearly 8,500 crore rupees via qualified institutional placement, that is QIP. So we'll have to watch out, keep an eye out for this stock. Thirdly, Coffee Enterprises will also remain in focus because they signed a definitive contract with the Blackstone Group and the Satwa Group for investment in the Coffee Day Group's Global Village Tech Park, and they have valued this tech park at close to 2,700 crore rupees. Now, according to the company, this would bring down the company's debt level, which is currently at close to 5,000 crore rupees as on August 17, and they will receive the first tranche of investment by October 31st. That is what the company has said. CG Power and Industrial would also remain in focus because SEBI has ordered BSE to appoint an auditor for the company's forensic audit of the books starting from financial year 2016. Now, they have also barred the former chairman, that is Gautam Thapar, and 3 others from accessing the markets when it comes to CG Power. Gujarat Alkalis and Chemicals will also remain in focus because they have completed the commissioning of the remaining 12.5 megawatt solar power plant in Charanka. Now, the total installed capacity at this plant is close to 35 megawatt. Glenmark Pharma would also remain in focus focus because S&P Global Ratings has revised their outlook on this company to negative from stable, but they have reaffirmed the BB- rating for this company. Now, weaker than expected operating performance and elevated capital expenditure would result into low financial headroom that would be impacting the company's financial, and that's the reason they have revised the outlook to negative. Lastly, Magma Fincorp would remain in focus because the NBFC has entered into a co-origination arrangement with ICICI Bank for asset-backed finance business. Now, this arrangement represents an alternate mode of disbursal for Magma Fincorp that would be asset-led and create a sound revenue model through fee income. Now, according to this agreement, Magma Fincorp has only to source service loans and collect repayments from the customers of ICICI Bank.
Thanks so much for that, Somit. Now, the island country of Jamaica has lost 85% of its coral reefs due to climate change, but scientists there are recovering them bit by bit. How? By cloning them. Take a look.
We've trained up a couple of fishermen as coral gardeners, and these are the guys who are actually in the water doing the work, you know. We've taken corals from the wild and we break them into tiny pieces, and then each tiny piece grows into a new coral. So we're basically cloning them.
We go to visit the corals, the nursery. We see a lot of fishes around. So we know that the fishes are slowly coming back.
All right, let's have a look at some of the stories you'll find on the website bloombergquint.com. First up, the GST should be lowered with the larger intent to stabilize the indirect tax regime and not to address the ongoing slowdown in the Indian economy, according to Sanjeev Sanyal, who is the principal economic advisor to the government of India. And margins of Indian stainless steel makers may come under pressure as prices of nickel, which is a key raw material, are rising amid lower demand for finished products. The price of nickel, which is, by the way, the best performing base metal so far this year, rose 46% in the last 3 months on the London Metal Exchange, according to Bloomberg data. Experts expect that the pain on the margins will be felt belatedly after inventory gains play out. Right, that's all we have for you on this edition of All You Need to Know, but there's a lot more coming up in just a short while. Do stay tuned. This is Bloomberg Quint.